ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely
1 2 1 2 1 2. All right. You guys should be able to hear me. Just put that there. All right, guys, via the live stream, obviously, you know, drop a like, the usual stuff. But right now, I'm waiting for CPI for the dollar and initial jobless claims. Yeah. So I think gold looks alright today. You know, I think gold looks alright today. I feel like we can get a move on gold today. That 4-hour candle from, I think it was Tuesday, this 4-hour candle was real ugly, and the fact that we've just rejected these highs as well, I think will really start to stretch. Obviously, when this data does come out, we'll see how markets react. This morning was really ugly price action. So let's see. Money day, everyone in the live stream. Hello. Hope you're all doing well, etc. All right, we're about 5 seconds away. 5 seconds away. The dollar just been shopping, boy. I did think the dollar would drop some more today, but it just hasn't. All right, dollar's jumping, gold's probably clapping down, and yup. I think today is a good day to trade gold, you know, guys. And just open up the metas.
Good morning, gentlemen. We've got a hotter than expected reading as CPI on a month-over-month basis rises 0.4%. 0.3 as expected for the core. The year-over-year rate goes to 2.9% from 2.7%, and the core rate goes to 3.1%, stays at 3.1%, we should say. The other number out,
Dollar's clapping down. Let me turn up Bloomberg for you guys.
Last week. Don't have the previous revised number, but the unrevised number was 237. So a significant movement there. In terms of continuing claims, 1,939,000. That's a drop from 1,940,000. But remember, those are a week behind, so they're still reflecting lower rates of unemployment insurance filings for the month for the previous week. In terms of what we got here, index for energy was up 0.7%. There have been concerns about the fact that AI power plants are raising prices to try to pay for all the power that the AI people need. Food increased 0.5%. That's going to be a political problem for the president. Food at home up 0.6%. Airline fares, used cars, trucks, apparel, new vehicles all rose. I'll get you those figures in just a moment. But the index overall for services is something that we are concerned about. And services, less energy, the core services rate was up 0.3%. That's a little bit of a decline from 0.4 last month, which scared overall economists. But still, this number is nothing to write home about for the Fed. Probably not enough to dissuade them from, or to persuade them to do 50 basis points or dissuade them from 25. But it is still a higher number than forecast.
Mike McKee, I'll get to the markets. We'll come back to you in just a moment. Stay close. So we've got a bit of tension here. Small upside surprise on headline CPI, but a big upside surprise. The wrong kind of upside surprise on jobless claims. What wins out, you decide. I don't have a view, but the chairman does. The chairman of the Federal Reserve has told you that the labour market is the thing that he's focused on right now. So push that view through the bond market at the moment, and we're trading on claims. Yields are down at the front end of the curve by 6 basis points, 348. The dollar's weaker, euro dollar back through 117. Equities positive, Bramo, by 0.25%.
Yeah, if you take a look at the 4-week moving average of initial jobless claims, they came in at the highest pace going back to June, but the fastest pace of increase in that metric going back to December of 2020. To the extent that we saw downward revisions, the labor market very much front and center for the market. What I would would suggest is this is a market that is gaming out a longer-term weakness in the labor market that suppresses yields across the curve. This isn't just the front end. I think that is telling you something.
Mike McKee, you've got a second look. What do you see?
Well, right now we're looking at new car prices up by 6%, according to this. No, that's used car prices. I'm sorry.
Guys, if you're in live stream right now,
new car prices up by 0.7%. So
drop a like
big
on the
rise
stream.
in new
It does
car
help with
prices,
the
but an even
algorithms.
bigger rise in used car prices.
But essentially,
that's been in the
I'm
wholesale
marking up a
data for a
potential
while.
gold short here.
Apparel prices were flat after falling
turn down
0.3%
Bloomberg a
of
bit.
1% last month. So maybe a little bit of the
Yeah, I'm eyeing up a potential gold short here. The only thing is, obviously, you know, the dollar isn't strong at the moment. Right, we have a very bearish candle. We've had a, you know, a test already.
On a year-over-year basis, down 0.7%. In terms of
This is around 70%.
The month-over-month numbers, and that didn't keep us from getting a much higher rate.
That's around 78%.
Mike McKee, appreciate the update. Michael, thank you. Joining us now is Tiffany Wilding of PIMCO. Tiffany, welcome to the program.
So let's say about 90 pips, a 90 pip stop. It's already 4%. That's quite good, actually. I do think this can come down just a little bit more.
Predominantly, the firming categories are in goods, and otherwise things look a little bit better. I think the more concerning news from the data this morning.
All right, let's leave some alerts around there.
It's been relatively contained despite the labor market, really slowing to a halt over the
Yes, Mark, how you doing, my bro?
And now the jump
Am I
today
back on
looks a little bit
gold?
more
Yes,
concerning,
I'm
like
back
we're
on
moving out
gold
of
this
just a
month.
period of
Today, gold
very
looks
little
good to
activity
trade,
or very
so
little hiring or
I'm looking
firing
at gold right
into
now.
potentially some more separation. And that's going to be super concerning.
After, so Tuesday we had that bearish closure, and then today, this morning, when we took out that low, that confirms to me like, okay, cool, there's a higher probability of gold actually stretching lower one more time. Obviously, as you guys have seen, when gold wants to push, it doesn't chill, you know. It will push, create a new high, push, create a new high, create a new high. It might chill for a bit, a day, and then create a new high. Might pull back, but then create a new high. So we've been here. Since we created that high, we then broke down and made a new low. Then we failed to break the high, so we created a lower high. And now we've made another new low again. So I'm anticipating us potentially getting another lower low. Long story short. Guys, if you're in the live stream right now, don't forget to leave a like on the live stream, guys. Leave a like on the live stream. If you are enjoying my content, if you want to see more, the link to my Discord is in the description box down below. And whilst you're there, subscribe if you haven't done so already.
Just the fact that the U.S. Treasury market continues to be a hedge.
I'm just trying to listen to Bloomberg and obviously look at what gold's doing at the moment. We can look at the stock market in a little bit. Right, when I look at NAS, I like what we've done here. But obviously, we still need to wait for the stock open volatility. Yesterday, we did eventually come back down to break even, and then we sold off. At that time, there was a really nice sell here around 8 p.m. and I didn't catch that. I couldn't be bothered to look at charts anymore. There was also a nice entry for a buy around 9 p.m. as well. So yeah, yesterday was just one of those days where price movement happened a lot later on during the day. Okay, so
call it February, March, when consumers are starting to get really big refunds from retro.
Guys, don't forget to leave a like on the stream, guys.
Until then, we're really kind of in this period of weakness, and to us the question is,
Spoos as well dipped that low.
that are really having to shoulder.
Want to see it continue higher? Okay.
Maybe they're not getting as much benefit from the one big beautiful
all right.
tax cuts. Can they really hold on here without firing people? And it seems like maybe there's more concern around.
I mean, from a glimpse, I'm still bullish.
Tiffany Wilding of PIMCO. Tiffany,
still bullish on stock market.
Got to catch up with clients too, so thanks for making time for us this
still
morning.
Bullish, but a small part of me does think that NAS wants to come for this low.
Equity futures just about unchanged.
I mean, we'll see. We'll come back to this later. I'm just going to look at gold for now. With the dollar dipping lower, we've just taken out today's Tokyo session. Okay, so this is yesterday's low. Okay.
And the labor market data was concerning, Kim.
Is that yesterday's low? Yeah, that's yesterday's low.
This morning because there's much more emphasis on what we're seeing on claims.
And it seems
Right,
like
so that's the
idea
daily
that
low
we're seeing a
there.
pickup in layoffs, to Tiffany's point, raises the question of how companies are adapting to some of the higher input costs. I was looking at some
Oh,
of the
that's a really nice
specifics
move
here
there
in
from the
CPI
DXY
print.
guys.
Airline fares up 5.9%
This looks
on a
pretty
monthly
bearish here on the
basis.
daily.
So again, it talks about the K-shaped economy and how the Fed is trying to cater to people who cannot
Alright.
afford to pay that. Those who can.
That looks pretty bearish
David
there on the
Kelly,
daily,
JP
in
Morgan
fact,
Asset
for the
Management,
DXY.
standing by. David, you've been looking at the data. Just want your first reaction, please.
So we got this low point, we got a high point, we got a lower low, we got a lower high, we got a lower low, we got a lower high, we got a lower low. Right now, we're, you know, price has pulled back. We've seen price pull back. Right, we've at least come to 50%. Okay. Zeno Camp Money Day, Josh, ready to do some more lessons when you are. Sure, bro. Zeno, can you send me a message on either Telegram or Discord? Yeah. Yeah, just send me a message on Telegram or Discord. Anyways, as I was saying, right, so we've had that pullback up higher. With this daily candle and how it's been forming with the wick at the high, this does, you know, it does lead to me understanding like, look, there's a huge potential for us to actually create a new lower low, right? Especially when we look at current price action and current structure. We have been, you know, working ourselves lower and lower and lower. The other, you know, case is since we had this high, this low has remained intact. So technically, the overall swing picture is still bullish. Technically, you know, if you want to get into the technicalities of it, technically it is still bullish, right? So weekly, yeah, it's just the chop that we're in at the moment.
No, I mean, there's weakness. The thing is, as Jay Powers,
I'm trying to gain an understanding of what the DXY is doing so that I can position myself, or we can position ourselves correctly inside of the.
It's still hard to find good people, but I do think it reflects the fact that businesses don't want to hire here. I don't think there's a huge ongoing.
So that we can position ourselves correctly inside of the DXY. Oh, sorry, position ourselves correctly inside of gold.
The playing field is going to be with regard to tariffs going forward, and I think that is, you know, that's the biggest thing that I think people are ignoring here.
David, a lot of people are hoping that things pick up in 2026. The growth story,
and what's also interesting to keep an eye out for as well is what price did after the release of the news. Right, look at this really nasty wick. So we ran the low first. Yeah, we ran the lows before we started rallying up. So let's just say you were a seller early morning.
All of them were made retroactive to January 1, 2025. But the IRS,
let's just say you were a seller early morning on gold, right? With this current news, the CPI and the initial jobless claims data that came out, if you were a seller and you didn't take profit, you would have either been hit at a stop loss or break even. And if you tried to buy this, maybe somewhere here as price started to move up, this wick would have wiped you out as well. Because this is quite an aggressive run up, quite aggressive candle as well. So yeah, right now we're just going to monitor gold.
Appreciate it. David Kelly there of JP Morgan Asset Management.
My only concern is I don't want this trade to kind of get away from us, even though, or due to the fact that I'm looking at slightly higher prices. You know what I mean? Because sometimes you are in a position where you might miss your trade because you're waiting for a different area to buy or sell or enter. Because the thing is, if this area was a little bit smaller, I wouldn't mind taking a short from gold now. But 180 pips, I'm just not doing that for an SL. I'm sorry. I refuse. 180 pips is far too big. Alright. Take a look at GU as well. GU's play is definitely slightly better. Okay, nice, nice. Yeah, you know, EU just looks incredibly bullish right now. You know, I just don't see this completely flipping on its head, unless if there's something else that happens economically speaking. Anyways, let's look at this data. So initial jobless claims was 263K, right? The forecasted was 235K. So it's worse than expected. The previous was 236K. Why would they think the jobless claims will be going down right now? It's surely only going to go up. CPI has improved for the month of August. So there is definitely slightly more economic activity going on. Right? It seems like the rise in CPI data is fueling the dollar's strength right now. Sorry, is not fueling the dollar's strength right now, is weakening the dollar. The main thing obviously is the initial jobless claims. You always want that to be a good data, you know, 8 out of 10 times. You want to see jobless claims go down. Right, obviously if there's less people working, then there's less taxes being paid, there's less economic activity. So we got an ECB conference at the moment.
And ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
Got the ECB press conference. Okay.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business.
I have a feeling gold's gonna go, man.
More than what you need to know, it's what you need.
Let's see what Bitcoin's doing as well. It's got a message. Let me see.
Live from New York City, welcome back to the program. We want to pause now for a moment of silence being held throughout the city of New York in remembrance of
and also, guys, Charlie Kirk. Oh my days. What are your opinions, guys, on the whole Charlie Kirk situation? That is so sad, man. That is so sad. Like, Charlie Kirk's situation is so sad, guys, man. That is so sad. I was talking to the fellas about the whole situation of how he was, you know, he was basically assassinated, man. It's crazy. Can you give me a short analysis of what you can see on GU, bro? Yeah, sure. Very sad for that to have happened. Don't matter if you agree or disagree with his belief or political opinion. Literally, like, no one like, no matter how you look at the world, right, there's always going to be, you know, someone that's going to disagree with you no matter what you do, no matter how you do things. Someone is not going to like it. Do you know what I mean? Like, wherever there's light, there's going to be darkness. Do you know what I mean? Like, but bro, like, yo, come on, just out in the open like that in front of thousands, what seemed like thousands of people is crazy. Like, this can't be happening in 2025, you know? And then, you know, I go online and then I see you know, people trying to debate like he's got a blood bag, like it was fake. I'm like, bro, are you seeing what I'm seeing? Like, he was slumped over, like, you know. And at the time, I remember people were saying like, oh, I think Trump said at one point, oh, he might still be alive. I'm like, there's no way. There is absolutely no way. There's absolutely no way with a critical pinpoint hit like that to one of the biggest arteries in your body, yo, like, it's a long day. Well, one thing I can say is at least, you know, there was no fear or panic when that happened. Do you know what I mean? Like, because he didn't know it was gonna happen, and that's probably one of this might be a bit insensitive to say, but for me, I wouldn't want to know how I go. Did you get it? I want it to be quick. But that's crazy. Joe says, to be honest, when I saw the video, I thought it was a meme or something. When I saw the video, I was like, yo. Let me look at GU for Xeno. I want to take a short on gold, guys, man. Price is moving. I'm gonna take a wee short here on gold, guys. It's kind of already moving without us, anyways. But let's try a little something, something. Okay, so for GU, I'm literally trying to listen to Lagarde's speech right now. Alright, so GU monthly bullish, weekly bullish, daily, taking out that low, boom, low. Okay, GU right now is bearish actually. Or has it taken out this high? This is not clear. Alright, daily's unclear for now. Alright, so H4, we have an imbalance play here on the 4 hour, which gave us a new high. We're now currently back in that exact same imbalance area. This high. What's gold doing? Pulling up. Alright, let's see. Will the dollar keep dropping or will it push? To be honest, the initial entry that I want is a bit higher, but I'm actually gonna enter gold on this account as well. We might have to wrestle with gold a little bit today, but we'll be alright. We shall be alright. Alright. So as I was saying, on the H4 we have played back into this 4-hour imbalance. Obviously we've had that initial rejection out of the area. The hourly, do we have any key points of interest inside of here? The question I should be asking you, Yazino, is what do you think about GU? Like, what's your opinions on GU? Because at the moment, with GU's current rejection from the news, right, there's no way we would have been able to anticipate what price or markets was going to do. Like right now, when I look at GU, obviously there's a few factors that we need to pay attention to, right? Obviously we have this hourly imbalance up here. We had a high of the day here as well. In terms of the hourly, where did we last have a high? High, low, we've broken that, we pull back, we've made a new low, right? So right now, just looking at this from a face value, this is giving me sells. This is telling me that we may head down lower. However, when we look at the 4-hour, and I understand that this is the last 4-hour higher low, in order for us to maintain the bullishness on the higher time frame, this low shouldn't be taken. The next thing to also bear in mind is we do have lower points of interest, right? So if you go to the 8-hour, 4-hour, 2-hour, whatever you want to look at, right, we do have a unmitigated zone where markets can eventually reverse from. So what I would look out for, okay, there isn't an exact setup right now, is I'll look for this price up here, right? So that's 1.35600. I'll look for this area, this imbalance, see how markets react to it, right? Do we get sort of a rejection lower? And then all you need to do is look for a trade on the slight pullback and then catch the ride lower. Or do we trade through it? Because if we trade through it, then you just need to wait for a pullback, catch the long, and that's it. Do you get what I'm saying? I hope that makes sense, bro. I haven't really been looking at GU as of lately, so I wouldn't say like it's flowing with me right now, but guys, if you're not in this gold short, I think this gold short will play out, you know. Just take a little small position if you're scared, man. If we hit a stop, ooh, dollar's coming down. Alright, if you haven't taken this gold trade, hold your horses. Hold your horses. Dollar is dropping down. Let's listen to Lagarde for a second.
Uncertainty. A renewed worsening of trade relations could further dampen exports and drag down investment and consumption. A deterioration in financial market sentiment could lead to tighter financing conditions, greater risk aversions, and weaker growth. Geopolitical tensions, such as Russia's unjustified war against Ukraine and the tragic conflict in the Middle East, remain a major source of uncertainty. By contrast, higher than expected defense and infrastructure spending, together with productivity-enhancing reforms, would add to growth. An improvement in business confidence could stimulate private investment.
I'm in this already anyways.
Could also be lifted,
so
and activity spurred.
I know the dollar is coming down.
Geopolitical tensions diminished.
This is a high-risk trade.
Remaining trade disputes were resolved faster than expected.
If we get tapped, we'll look for a higher area to go short.
The outlook for inflation remains more uncertain than
usual. We don't
usual
take more than 3 trades a day.
Still volatile global
let's say
trade
2 to 3 trades a day.
Environment. A stronger euro could bring inflation down further than expected.
I always forget to post shit sometimes.
Moreover, inflation could turn out to be lower if higher tariffs lead to lower demand for euro area exports and induce countries with overcapacity to further increase their export to the euro area. Trade tensions could lead to greater volatility and risk aversion in financial markets, which would weigh on domestic demand and would thereby also lower inflation. By contrast, inflation could turn out to be higher if a fragmentation of global supply chains pushed up import prices and added to capacity constraints in the domestic economy. A boost in defense and infrastructure spending could also raise inflation over the medium term. Extreme weather events and the unfolding of climate crisis more broadly could drive up food prices by more than expected. So looking now at the financial and monetary conditions. Since our last meeting, short-term market rates have increased, while longer-term rates have remained broadly unchanged. However, our past interest rate cuts
stock market
continued
looking good. I want to take a buy on Nasdaq right now, guys.
The average interest rate on new loans to firms
Look at this PA.
Moved down
price action.
to 3.5% in July from 3.6% in June.
US 30 clean.
The cost of issuing market-based debt was unchanged at 3.5%.
PA looks good. PA looks good on the stock
Loans
market.
to firms grew by 2.8%, slightly more strongly than in June, while the growth of corporate bond issuance
2 p.m.
rose to 4.1%.
All right, new hour
from
candle inbound.
3.4%. The average interest rate on new mortgages was again unchanged at 3.3% in July, while growth in mortgage lending picked up to 2.4% from 2.2%.
Dollar's really weak. Gold is holding, which is surprising, but dollar's
So in conclusion,
really weak.
the Governing Council today decided to keep the three key ECB interest rates
I think we
unchanged.
might get something from this gold short.
We are determined to ensure that inflation
It's high risk. It's high risk. Because right now, price can definitely head higher because the dollar's dropping. But I'm in this.
The appropriate monetary policy stance.
But Zeno, I hope that made sense. With the GU thing, yeah.
On our assessment of the inflation outlook,
so we're gonna look at this imbalance here. See if it's going to reject to the downside or it's going to trade through it. Obviously, if it trades through it, look for a pullback and to a continuation. If it starts to drop, let it drop first. Wait and let it drop, right? Then catch a lower time frame pullback and then go short. Okay? That's what I would do looking at GU.
Inflation stabilizes sustainably at our medium-term target. And to preserve the smooth functioning,
we might be cooked on gold. We might be cooked.
Thank you.
First question goes to Jana Rando of Bloomberg. Jana, please.
Wait, let me organize myself here.
Hello, good afternoon, and thank you for taking my questions. Madame Lagarde, economists believe the ECB's easing cycle is over, and with the outlook broadly unchanged, as you mentioned, would you say they're right? And would you say everybody on the Governing Council agrees on that assessment?
Gold's cooked. The only thing that's kind of
you
mentioned. Let me turn this lady down. The only thing that's a little bit of a saving grace is if gold, this SL is sufficient enough to hold gold. I don't think it will be, but if gold can hold where it is and the DXY can make a new low and start to pull back up, then we should see gold drop some more, right? Because right now it looks like gold's quite strong right now. Yeah, we're just taking out that low there on the DXY. Let's see.
Are we still in a good place? Well, we continue to be in a good place. Okay? Now, why do I say that? Because inflation is where we want it.
Let's see.
Latest reading 2.1.
This is Bloomberg Television. I'm Bonnie Quinn in New York. Today marks the 24th anniversary of the 9/11 attacks. Memorials are being held to honor the victims, first responders, and all of those around the world impacted by the attacks. We go now to a moment of silence in observance of when United Flight 175 struck the South Tower of the World Trade Center.
Gold's looking dark right now. Yep. Today's definitely bearish. We're gonna go for yesterday's low. That daily candle. Yep. Okay. Fine. If that's what you want to do, we're gonna use it. Okay, so we're still gonna wait and hold for gold. Hopefully the SL can remain intact, because this will pull back at some point. And when it pulls back, depending on how high it pulls back up, we can either close at a, you know, smaller loss, or we can close in profit potentially. Right?
You've been listening to a moment of silence at the 9/11 memorial. You can continue to follow the ceremony on your Bloomberg terminal at Live Go.
So I'm still
We
holding.
turn now, though, to the European Central Bank news conference in Frankfurt.
What I have just
Alright, dollar's pushing up a little bit now.
Agreed unanimously around the table.
Let's see.
On your second question, which deals with the risk to inflation, we don't actually narrow down.
We're 25 minutes away from stock open as well. That should be a fun time.
We assess the risk.
I mean, that's what I'm really waiting for, to be honest.
On growth, and that's where we say in our statement that risks are more balanced, but we don't nail down a risk diagnosis on inflation in isolation. But I'll be happy to come back to why we are more balanced. Maybe somebody else will ask that question. Who knows?
Next question goes to Annette Weisbach of CNBC. Annette, please.
Annette Weisbach, CNBC. Thank you for taking my question. I will just follow up on that question. So why do you think risks are more balanced now, given the uncertainty still which we see elsewhere in the world? And of course, I need to ask you about France. We've seen, of course, that the political situation and the
Boy, we might be chalks.
bond yields quite high. So how concerned are you about a déjà vu which we had
Yeah,
some years
man.
ago? Thank you. Not with France, but with other countries.
Looks like we're not going to get a continuation of strength here.
French déjà vu, huh?
All right, we'll look for the higher area above for gold, yeah?
No, more seriously. More balanced. I thought about it because I thought that one of you might have the question. You have to go back to where we were back in June, really, where we do the assessment of risk on the basis of the projections. And if you walk back to June, we had a highly uncertain situation. It was post-April 19, sure, but it was pre-July and certainly pre-August 21 when a deal was agreed and documented, however it was documented, but documented. And as a result of that, I think that two things have clearly moved out of our radar screen when it comes to downside risk. The first one is the risk of European retaliation. That was factored into our June projection, and that was considered as one of the risk in a trade war, as we had it at the time in terms of fear. The second thing is the uncertainty. So what we call, trade uncertainty, that has clearly diminished. And we can see that in the instruments that we use to measure uncertainty. It has not gone back yet to where it was pre-COVID. It's not the sort of normal level, and maybe there will not be a normal level. That's something that we really have to consider and take into account for future determination. It could well be that there was a reset in uncertainty around the world because of the trade situation, because of the geopolitical environment in which we operate. But the trade uncertainty has abated since June, when we had our last projection. So that's really what is at the root of this more balanced indication. It's not to say that risks have vanished. It's not to say that we are short of challenges. There are new risks, probably. There might be new ones. There will be new challenges, which really sort of anchors our determination to work meeting by meeting.
Gold's going to hit stop, guys.
Each and every time what the situation is. And,
if I wanted to be really aggressive, I would buy it right now.
And you will remember that one of the innovation in our new strategy is that
Right, I'd buy it right now, put my stop here,
but we look and discuss
target the high.
the risks around the baseline.
If I wanted to be really aggressive, but I'm going to leave it.
Sometimes published, sometimes not published necessarily, which is sensitivity analysis. I see some of them saying, what, it's not published? There are certain things that we keep to ourselves, yes. We publish a lot, we share a lot.
Why does she sound like that?
Sensitivity analysis, scenario analysis, and sometimes we do publish the scenarios, for instance, sometimes we don't, because we don't think it's absolutely relevant or helpful, but at least it informs our judgment. Oh, and you have the second question. Yeah. Look, I'm not going to comment on individual countries. I avoid that because we are the European Central Bank. We are not, narrowing our judgment on a particular country. But, I would say that I'm confident that the policymakers, that those who make decisions, will take it to heart in that period of uncertainty to reduce uncertainty as much as possible. There is also a set of rules that is the fiscal governance, the fiscal framework, that is the internal rules of the European countries, and the member states have to adhere to it, have to deliver against it, and I'm sure that all governments, wherever located, will want to operate on the basis of that fiscal framework. Thank you.
Francesco Canepa of Reuters, please. Francesco.
Thank you very much and good afternoon. So you said that inflation is projected to be a target over the medium term, yet the projection for 2027 is at 1.9, so below 2 for the second year in a row. So where does below target start? And the second question is, again, about France in terms of the specific rules of TPI. How far are we from a disorderly and unwarranted move on the bond market? Thank you.
Call a spade, huh? Okay.
Always.
So, yeah, you're right.
Cool.
So, let's go to the inflation projections, if you will.
Gold is flirting with our stop right now.
We have projections for
the thing is, I know it will hit.
27. 25 and 26.
But let's see. We'll just leave it.
Increased.
If it doesn't hit, then happy days.
1% our projection, right? So
I like NAS for buys, man.
Our projection is now 2.1.
NAS looks really good.
And we've increased it by 0.1 in 26.
Bitcoin looks really bearish, though.
So in 27, we are at 1.9. And that's, first of all, it's a big 1.9.
Go on, dollar. Give me some strength,
really
man.
On account of the exchange rate impact with the lag effect that it usually has, and this is factored into our projections. That explains to you the fat 1.9. I would also refer you, and I don't need to do that because you're very familiar, but we have indicated very clearly in our strategy that minimal deviation will not necessarily, if they remain minimal and not long-lasting, will not necessarily justify any particular movement. So, on the second question that you
nothing much is happening right now. We're about 18 minutes from stock open, so we'll just wait for that. And then we'll take our second trade of the day, and then we'll go from there.
Always monitor market developments. And euro area
let's see what happens with gold as well.
Orderly and are functioning smoothly with good liquidity. That's what we see. Okay? But, our focus is, as you know, price stability, but we need financial stability for that. And it requires a well-functioning monetary policy transmission mechanism. And we believe that we have all the necessary tools.
I mean, look,
if needed.
Dollar's pushing.
Should that
Gold's just not
transition
moving.
not proved efficient throughout the entire euro area. Thank you.
The next question goes to Aude Kasulek of the French TV channel BFM Business. Aude, please.
Thank you for taking my questions. Do you consider that quantitative tightening significantly contributes to the monetary policy stance? And to what extent does it reinforce tighter financial conditions or not? And second question, do you consider that a widening of certain spreads over Germany will pose a serious threat to the transmission of monetary policy? And in such a case, could this trigger the use of the TPI even in case of major fiscal challenges for some countries?
Thank you for your two questions. So on the on your first question, in the situation where we are of this disinflationary process and having increased rates from minus 50 basis points to 400 basis points, the most efficient and primary tool that we use for monetary policy stance is the interest rates, as you will have seen. And we have cut interest rates by 200 basis points over the last 12 months or so. The fact that we are not reinvesting and that we are letting our portfolio on a
Gold's
runoff
dropped a little bit.
mode is proceeding smoothly.
But I think it's about to jump now.
Telegraphed it very carefully.
But let's see if it was just flirting with that
it was
SL.
predictable. And I think that everyone
Dollar's pushing back
who
down
cares
now.
about those issues knows exactly how this proceeds
Joe
and,
says
and
US
what
30 looks bearish.
very limited impact it has. That's
Okay,
a resolution
I'll have
that
a
we
look
have
at
made,
US 30.
that we have explained very clearly to markets.
I quite
and
like
it
stock markets
proceeds,
to
accordingly.
push up though. Like
Now, as I
overall.
said, we are always
Right,
monitoring
this drop that we had
financial market
yesterday, clear
developments.
manipulation of Tuesday's
As
low.
I said as well, euro area sovereign bond
Rebounded
markets
literally
are orderly
almost to
and are
yesterday's
functioning
session high.
smoothly with good
So I think
liquidity.
there's a good chance for us to head up higher, but then
If
there's
you
also a possibility for us
observe
to head
the
down lower.
spreads,
And
they
right
have
now, I don't see a
considerably
reason for us to head
tightened
lower on US
over the
30, to
course
be
of
honest
the
with you.
last 2 years.
But let's see
And,
what
the
the
spreads relative to
open
bonds
does,
have
right? We'll
a
come back to
rather,
it. But right now, let's see what gold's
limited
doing. If gold's
width,
gonna, play
between
ball or is just
the,
gonna,
other member
I don't even
states
know, do nonsense.
relative to the German bond.
You know gold, man. Gold's always on some BS.
Next question goes to from the Bulgarian news agency BTA, Stas Stampolsky. Stas, please, here in the middle.
Hello, thank you for hearing me. You welcome the Bulgarian governor, Dimitar Radev, as observer.
Gold trying to make a comeback.
1st of January, when Bulgaria will become the next Eurozone member. How you see the benefits and the risks of Bulgaria to become part of the Eurozone regarding maybe inflation and deficit? And how you see the Bulgarian input in terms of the monetary policy decisions?
Well, thank you for your question. And you give me a chance to say something that I wanted to say in the first place, which is that on the occasion of this Governing Council meeting, we had a chance to welcome 2 new members around the table. The first one was the new,
so gold's coming
governor
back.
of
Gold's
Austria,
pretty much back at entry.
Martin Kocher. Forgive the pronunciation. I'm doing my best, but
That's why sometimes you
who has
just
joined us to replace
just leave your trade, man.
Mr. Holzmann. And the other person
Flirted
that we
with our
greeted
stock.
at the table was indeed Dimitar Radev, the governor of the National Central Bank
Now
of
the
Bulgaria.
real question is,
Now,
are we going
and I
to
would like
start
to
dropping,
welcome
or are we
those of
just
you
going to
from Bulgaria,
reverse?
because I know that there is a number of you
Because
who are
this
present
can
in the
still
room,
head
and
higher,
I
gold.
hope your colleagues will welcome you, but I certainly
just
welcome
watching
you,
the
and I know that you
DXY.
are spending a little bit of time with us.
Because
And
to
it's-
me,
it's
right now,
very,
DXY
very
is quite
welcome, because
bearish.
it's wonderful
We
to
got this
accept
little imbalance
and
inside
to
of here on
include
the 5
a
minute.
new member around the table of the Governing
For the
Council,
DXY.
and to have Bulgaria join the euro area and share our currency,
So
which is
let me
now
turn this down.
yours as of
So how we're
January
gonna have to
1st.
play this, yeah?
So,
Oh, it's a nice little drop. How we're gonna have to play this is you know, once we start to get any sort of profit, you know,
more than a couple of decades ago,
we might have to move to stop quite early.
the euro from
But this drop is
wherever
quite
we get
nice,
the
actually,
Dutch
for
mark,
gold.
the franc, the lira, the pesos.
Stop's quite
we had
nice. This drop, sorry.
anxiety. You know,
Let me see what the
is
hourly
that
candle looks like.
change going to be
Okay.
about? Would it work?
That's not
Would
a
it-
bad looking
would it
hourly
function
candle.
instantly? And surprise was
I don't
to
want to jump the
upside, I
gun
can assure you.
and say anything,
So
but
it worked.
you know, if we try to imagine or envision how this hourly candle is going to close, high of the hour is here, low of the hour. Low of the hour can be down here. Low of the hour could be here. Low of the hour could be all the way down here.
Any kind of business with
But obviously, that
members
depends
of
on
the European
partly
Union,
what the
part of the
DXY
euro
is doing. And do I think...
exchange
Oh,
was
okay, so the DXY has
facilitated.
taken
Why
out
was
the
that?
daily
Because
low.
of stability. And that's
So
really
it's
the,
reacting off
as
of
you
there.
know,
Okay.
it's the core of the mandate of the ECB to provide stability, price stability.
I want gold to head into a little bit of profit. We'll go break even on that, and if we get stopped, we get stopped. Like, it is what it is. Do you know what I mean, guys?
Is aiming and
Joe says USD might be bearish temporarily. Yeah, potentially, bro. Potentially.
Now observing a moment of silence, remembering the 9/11 attacks.
We'll look at that in a little bit, in like 10-15 minutes. Minute of silence.
As we commemorate the 24th anniversary of the attacks of September 11th, 2001, please join me in a moment of silence.
You've been listening to a moment of silence at the NASDAQ, remembering the 9/11 attacks.
All right.
And we'd like to go now to the New York Stock Exchange for a moment of silence there. Moments of silence there at the New York Stock Exchange and the NASDAQ, remembering the 9/11 attacks.
So I'm going to go break even right now. I'm gonna put my stop just here, or maybe around here. Because the thing is, yeah, guys, I do think gold might push back up. Not gonna lie, I do think it will. So let's just cover the stop.
You will also, don't forget,
The DXY is currently not aligning. It's not aligning well. It's not setting up well. Because if we look at the DXY on the M5, we've literally just had that rejection into the imbalance. Like, I would anticipate the DXY heading lower again. To be honest with you, you know, we might, you know, hang around here a little bit. You know, we got 8 minutes, so we might get this 5-minute candle maybe drop. Next 5-minute candle pushes back up. Maybe next one it stretches lower. But now that gold has essentially pulled back, made a slight low here, but then pulled back and then made a much deeper low. Putting our SL here for break even is a much better idea. If we get taken out, we get taken out. If it looks like we need to re-enter, we will re-enter. Or alternatively, yeah, guys, If you want to leave your stop open, leave your stop open. You know what I'm gonna do for this account? I might leave it open for the copiers. Okay, so copiers is here already. Cool. All right, cool. So we're BE for that. Oops.
How do you think about orderly and
we're BE for that trade.
Disruptions to bond spread that may also undermine monetary policy transmission?
BE for that. I've left it open on a separate account.
And I think it would be good to get some.
Because low key, I still believe in this short. You know, I still believe in this short, but the current price action that we're getting is not really the best. And obviously, if you want to manage your risk, you don't want to over expose yourself, etc. Then obviously just take it off. We will be looking at the stock market really soon, anyways. That should provide us with a little something.
I think there were many governors around the table.
But yeah, gold's really ugly right now, but you know, I think it's got a chance.
The strength of transmission and the risk. There was a good discussion
could be wrong,
on risks.
but I do think it's got a chance. At least when I take it on this other account, I know I'm a little bit more aggressive on there. So, you know, if I see something and I want to, you know, lot up, I'll just lot up there.
We are. Give me a chance to
5-minute candle's about to close.
But we are very lucky.
I don't know, man. This 5-minute candle, next one could pull up, make the high drop. It could still drop. Gold could still come down, guys. Can't lie. Gold can still come down.
From the statistics offices of the member states that are compiled by Eurostat.
Gold can still come down, man.
The trauma that we have seen a few years ago out of Greece. But despite that one, which I think has been a lesson for all of us, I think the integrity of the data that we use is very high. And this is valued by all of us. But we take all of that, you know, the data that exist, the projection that we receive, the detailed analysis, the granular details in which we go down to understand underlying inflation, the assumptions that we make on the price.
Okay, new 5-minute candle. Like I said, it could push all the way straight back up. It can hang around in here a little bit before moving.
The exchange rate.
So let's see if I'm right.
And we factor all that in. And it's on the basis of that mass of data that we
gold's
try to
coming down
organize
because of
as
it.
best as we can to
Yeah,
see
I
how
thought
it
so.
impacts inflation and how it helps us transmit.
Alright, so right now we need to see gold take out this low.
So I think that
Like this can give us some bullish price action from here, you know. Pull back, create a new high. So we need this low taken.
Rather circumvoluted.
We need this low gone, like ASAP.
I was familiar in my legal days, which was of a slightly different nature. So I think let's not over-engineer. Let's look at all the data. Let's look at all of them when they come.
So
decide on a meeting by meeting
TP1
basis,
is around
and make
here.
sure that we can continue to be in a good place.
Okay, so TP1, yeah, guys. Yes, Ritesh, how you doing, bro? TP1 for the gold short is...
Now your second one. You're very familiar with
3619.4, yeah.
A host of details and terms and conditions.
Let's just say 3620. Make our lives easier. 3620.
More than a year ago at the
Yes,
time
my
when
bro, I'm
it
good. Thank you for
came out.
asking.
And you have to remember always that there is a set of criterias. There is a market assessment, and then there is the decision of the
So
government.
let's see.
So it's in no way cast in stone, or it's not a straight jacket, and the discretion of the governing council always exists. Now, having said that, this is an explanation about TPI, because TPI was not discussed at all in the course of our governing council meeting.
The next question goes to Leonard Euxlitidis of Handelsblatt. Leonidas, please.
Good afternoon, and thank you very much. Firstly, I would like
There
to
goes
come back to
Nasdaq.
the inflation
It's
outlook.
gonna take out the high.
Last week,
2 minutes from the
Isabel
open.
again explained in detail why she sees the
Damn,
balance
should have taken that
risk
buy,
to
eh?
the upside.
I want to take a
You
buy
said
here
you didn't discuss so
earlier.
much about the topic today, but can you tell us, did more governors
Because the thing is,
today
once we
share
take out
some
this
insight
high,
with you compared to July? Could you share some brief insights with us? And secondly, in July, your communication was interpreted as more hawkish. Were you surprised by that? And
anyways, it's
you
fine.
feel
It's fine.
comfortable
We'll
with
come
the
back
fact
to it.
that markets now
We just
less
need gold.
likely
What's gold
to
gonna do
factor in
here?
further interest rate cuts?
You know,
Thank you very much.
DXY wants to drop,
So I will discount
so
your
gold
third
can
one.
push up from here. You
2
know,
is already a stretch, but
it really
3,
could.
no. You know, as I just said,
You're in a buy from 36.20. 36.20. Oh, you just bought now. Did you just buy gold now, or was it from an earlier buy, bro?
Around the baseline, the risks. We had that
I think
discussion of
gold's buy area is lower.
risks
Like I think
to
firstly
growth,
we can start looking at like, let's say 36.08, and then maybe start looking at 35.98 if the first area fails. Right, if we don't get a buy from here, then we need to look for a buy from here. If we don't get a buy from there, then we'll probably get a buy from somewhere here. But
this is all sort of highly technical and subtle, because depending on where you are and where you want to be, those risks to inflation, to the downside or to the upside are either good or bad.
right now
So
we're in a
what
short
went
from
into
gold
the
from
barrel
earlier, yeah, bro.
My previous
Just so that you're aware.
questioner, that is a bit circumvoluted. But we do have
Goodbye,
those
Nasdaq.
discussions, and we did have it yesterday and
The
this morning,
Nas.
and it resulted
I need to hear
in the
Joe say Nas
paragraph
again.
that you have in monetary
The
policy
Nas.
statement, which starts with,
All right.
I will quote it for you if I find it right away. Risk to economic growth have become more
All right.
balanced.
Stock open now.
And I tried to explain why we came to
GDX has gapped down the open,
with risk to
which
the
is good.
downside, which was incorporated
GDX has
in
gapped
our
down, which is good, which is good.
It relates
But we are pushing up right now. Pardon me.
statement. It relates predominantly
GDX is pushing.
So that is President of the ECB, Christine Lagarde, speaking in Frankfurt. We'll return to that news conference in just a moment, but we do want to bring you these opening
Guys,
numbers.
come and see Nas.
Once again today on the back of CPI data that perhaps wasn't as bad as
That is so annoying.
claims that although slightly
Anyways,
worse than
it's
the
fine.
estimate, were also perhaps not as
We
bad
will
as
catch
feared.
this.
So we have a rally continuing, the S&P 500.
We've still got yesterday's high to work with, so that can be our target.
A full half of 1%, that halo effect from Oracle's 36% jump clearly.
Oracle's up 36%, guys. We should be buying everything, yeah. Even US 30 as well should be up. S&P should be up as well. Anyways, we got to give this like 15 minutes, 30 minutes to build the picture.
Reaffirming its outlook for the quarter and full year after seeing a rebound in consumer confidence. Open Door Technologies, look at that, 31% higher, bounding higher after the co-founders rejoined the board and a Shopify executive was named CEO. And then Klarna shares.
Okay, gold's pushing up as well then.
That'll tell you the kind of market it is, because they were lower pre-market after rising 15% in yesterday's IPO. Well, they've just turned again. Let's get back now to Frankfurt and ECB President, Madame Christine Lagarde.
Exactly what was
Everything's up right now, guys, man.
Majority of my governors around the table, and I think I've, as mentioned earlier, repeatedly said that we continue to be in a good place, which does not mean that we are on a predetermined path, because we have to decide meeting by meeting, because we are data dependent, and because we have to face the risks and challenges that are coming. Thank you.
So the next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Okay, gold's not playing ball right now.
Thank you very much for the opportunity. So my first question is on the resilience
Gold is not
of
playing
the
ball.
Euro economy. How far
You know what?
is this resilience,
I'm gonna leave gold, man.
one of the reasons
GDX is just getting out of here. Look at GDX.
And
I'm going to leave this set up for gold.
if I may, is still on the good place where the ECB is.
Excuse me. I'm going to leave this set up running.
Also think that it
If
could
I hit
be
stop,
a
so be it.
pause in the direction of a rate cut,
If
in the sense
maybe
that
the short comes from a little bit higher,
a direction
but I
of
still do
travel,
think there's a chance for
as
this
an
to play out.
expression
So
we used in the past.
I'm going to leave it do its thing. We're going to turn our attention over to the stock market and see what that's doing.
Fidelity in attending and in remembering the words that I've used in the past. So you are right to refer to the resilience of
US
the euro
30,
economy.
probably.
And as an example of that, the fact
I just
that
need to
we had
find
over the
what's
first
the
half
best. Okay, so US
of
30 had a
25,
imbalance play on the
0.7%
5
growth
minute.
is quite indicative of that
Cool.
resilience. Now, some would argue,
So
we had a big front loading
yesterday's
in the
high
first
is
quarter and a
here.
big payback in the second. And I would submit that this is not actually the case. There was front loading, but
That is
the
140
high
points from where we
unexpected
currently
income
are.
that we had during the
So
first
if there's
half
like
was
a 50
partly
point SL
front loading,
for
but
US
was also
30,
partly
that will give us at least a 1
investment
to 2 R
and
for the high.
consumption. And if you look at the second quarter, which is higher than we had anticipated,
I think Nasdaq and US 30 might be the easier pairs to trade today,
for reasons that many of you understand. But if you take
or the easier indexes to trade today.
to contribution of consumption and investment,
Nas
to
from
growth
where
was
it is now to that high is 50 points, and usually my stop for Nas is about 40 to 50
We know
points.
that there are headwinds.
So
and
there's a
there will
1R
continue to be
available for
headwinds to
Nas.
growth. But I remind you that we have revised
Okay.
upward our growth projection for the whole
But gold just
25
doesn't know what it
from
wants to do right
0.9
now.
to 1.2%. So it's a 30% increase when you think of it, right?
Guys,
But there will be headwinds.
the aggressiveness in me wants to come out, you know.
And that is reflected in the slight adjustment that we made for
How much is this?
26. We revised growth for 26 by 0.1.
I'm gonna add the gold, man.
And we left 27 unchanged. And we believe that there will be positive for growth that result from
Let me
the
add the gold.
real disposable income that people have.
Let me
And
add
we
to that
continue
joint.
From a very strong labor market. We project labor market to have a 6.1%
Let me add to it.
unemployment rate, for instance.
All right, let's come back to the Nas. We need to give it at least 10 more minutes before we can even execute any trades.
This is not a given.
Yes, that is just strong.
That those savings,
That 15-minute candle on gold looks real nice. Real nice. Let me use this chart.
Added to which,
because if we say this is the high of the 4 hour, yo, we could stretch, you know, we could stretch down for gold. And let me show you the 15-minute candle. It's a really nice bearish looking 15-minute candle, guys.
The Recovery and Resilience Fund continues to be disbursed until the end of 26, and the military expenses will pick up the baton from there.
Okay.
And will contribute to.
It's a nice little drop here on gold.
To growth. So those are, essentially the reasons that we see on the.
We just hit TP1.
There are downside, as I said. There will be headwinds.
All right, we've taken out that candle's low. Perfect.
More trepidation in trade, the strength of the exchange rate, and what have you. And this is factored into our projections, by the way. I'm not
That's
going to
TP1.
characterize as pause, hold, direction of travel. I think all of
Smashed.
that is
Smashed.
swept away by the principles that we have agreed, which is to be data dependent, to decide meeting by meeting, to not have a predetermined path, and to really look at inflation outlook, meaning baseline.
Now we want to take you to a moment of silence in observance of when American Airlines Flight 77 struck the Pentagon.
That you, O Lord, would assuage the anguish of their bereavement and leave only the cherished memory of the loved and lost.
Just gonna leave some more alerts here for gold when we get the chance to look at it. Ooh, okay. So Nasdaq's dropped all the way back down.
To secure our homeland, to wield the sword in righteousness, to protect our neighbors, grant prudence, to execute justice with honor, always mindful we are under your divine gaze.
What's gold doing?
Grant the blessing of wisdom and insight for our leaders, that they may be guided to do your will. Grant humility throughout our land, acknowledging
Dollar's just chilling, guys.
to us. And finally,
So we're gonna use this as an opportunity to just grab something from gold,
are
man.
deployed, underway, or on duty for our nation. Surround them with the protection of the angels.
Alright, so we're about...
Faithful loved ones.
I would hate to move my stop from here to entry and then we just shoot all the way straight back up again.
For that minute of impact 24 years ago.
It's annoying, but I'm gonna do it anyways. Alright, gone break even on the first entry. Hopefully this doesn't hit, but we'll see how that does. Nasdaq's coming down. US 30 is having a slight retracement as well. Still need more information. They see me rolling. They hating. Patrolling and trying to catch me riding dirty. Trying to catch me riding dirty.
All right, you've been listening to a moment of silence at the Pentagon. President Donald Trump and First Lady Melania Trump in attendance, marking the 24th anniversary of the 9/11 attacks. You can continue to follow the ceremony on your Bloomberg terminal at LiveGo. We return now, though, to the ECB news.
Gold's trying to ruin our fun right now, guys.
Moment, as far as the US-Europe relationship is concerned, really focuses on trade and how much more we're going
I'm gonna
to
close
learn
the stream at 3, yeah, and then I'll
situation
give you guys
and
updates inside of the
repercussions that it will
Discord.
have,
If you
taking
guys are
into
not
account
inside the Discord,
the overall
the
spread
link to the
of
Discord
the
is in the
tariff
description box
changes
down
that
below.
have taken
You can
place and
join.
will
I give
continue to
updates
take
throughout the
place.
day
Thank you very
of
much.
what pairs I'm looking at,
Next press
etc., etc.,
conference is
etc.
on 30 October, not in Frankfurt, but in Florence after our external governing council. Thank you very much.
And you've been watching the ECB news conference, but I do want to give you a check on stocks now. We're about 10 minutes into the trading session, and we are higher on the day after economic data didn't pan. So we have the S&P 500 up 0.3%, the Nasdaq 100 up about 0.25%. Now the Russell 2000 is flying away with things. It's up 0.5% right there, those small caps, benefiting potentially from any interest rate cut that we might see next week and beyond. Let's take a look at yields, because we did see just a slight flattening of the curve and yields lower, and they're staying lower. The 30-year yield at 4.66. As you can see, the 2-year yield there at 3.50. The 2-10 spread is just at 50 basis points now. It had dipped below that for a few moments just a little earlier. Well, joining me at the desk is
Alright, see, this is why I wait for the stock open, man. The picture is just changing right in front of us. Nas is heading down, US 30 is heading up, S&P is not really doing much right now.
I do want to acknowledge that it is, of course, the 24th anniversary of 9/11.
But we'll keep watching.
Really awful, fateful day. You've never spoken publicly about where you were that day. Would you share it with us now?
Yeah, look, there are very few days and times in a person's life that shape that person's life. And I was downtown that day as a trader, and you know, lost friends and colleagues that day, and so that has stayed with me. But there was really two things I think that I take away from that day, and the first on a business level. You know, as tragic and horrific as it was, as huge a blow as it was to the United States of America and really the world, we remain resilient. Things bounce back. The markets opened a week later, and you know, look at the progress we've made in all walks of life since then. And then, of course, on a personal level,
that 15-minute candles changed
when I got
so
home,
fast.
the look of joy and relief on my wife's face, and having my 2 young sons there when so many others didn't return home, is something that stayed with me.
And you've mentioned to me that you were about 500.
Okay, so we're done. Look at that. DXY is pulled back. It's just going to continue dropping. Sorry, it's going to continue pushing. Sorry, it is going to continue dropping. Yeah, that was right the first time.
Life has to go on.
All right, we might have to just leave gold alone.
We're reminded about the resilience.
Because dollar's just not going our way right now.
Tragic happenings in Utah just yesterday.
Absolutely. These things continue to keep coming, but there are a few days, as you mentioned, that get seared into the brains of Wall Streeters, and I definitely think that 9/11 obviously takes, the icing on that. Do young traders ever ask you about that day and that time period?
All the time. All the time. We talk about it. I started my career on a stock exchange floor, the American Stock Exchange. And so there is a difference and a novelty, but again, the camaraderie that's very particular to the financial business is something that people understand and share. And, part of developing in the business is learning the lessons and understanding the lessons of the past.
For sure, and we'll always remember, and it's hard to believe it is the 24th anniversary, but there are people still around that can remember and were there on the day, which in itself is a consolation, right, Julian?
Yeah.
Well, I guess let's talk about markets then, and this bull market that just keeps going. Julian, you told us we should be perhaps prepared for a little pullback. Did we already see that pullback, or are there more to come?
Well, so, if you think about the data we saw this morning, if we had seen that data 6 months ago, the markets would be plunging, okay? Jobless claims breaking out of a multi-year sort of sideways channel, and, hot inflation data. And so in our mind, there's still a likelihood that you're going to get a pullback. And frankly, every great bull market, and this is a
no setup just yet. No setup just yet.
Which we think ultimately goes to 77.
There is no setup just yet from looking at stock market. I do want these to ultimately head higher.
To get off the ride.
But sometimes, it gives you a little bit of headache before it gives you the move. We'll give you yesterday as an example. We were looking for longs. Eventually, we dropped down before we started rallying. So we just need to just chill. Because right now, we've had a push up, but hasn't really led to anywhere. That push up.
Would you say we're on track to meet your forecast?
We're absolutely on
so
track.
right now,
all credit to my team who developed
realistically on the 5 minute, we're working with this low and this high.
We're really on track.
So we can still get a push up anywhere from this low to this high, but
the difference this year and
just gotta be patient with it.
Has been so relentless off of that April low is that companies across
look for the signs of continuation. Because right now, all I see is prices heading down lower. I've had a slight pullback into this imbalance here.
That's different and that's bigger.
Yeah, and Julian, I have to
We
ask you
might come for the news low, the news wicks low. It's possible.
Most of the buying, let's say, or see most of the buying through this, Nvidia being one of the very large ones. But are you seeing just a little bit of rotation into other AI and AI adjacent stocks in the last few weeks?
Well, you are, but actually when you take the backdrop of it and you think about this bull market in the context of the late 1990s, what's remarkable about it is that market breadth in the late 1990s was actually poor. It was sort of all technology all the time.
You stay strong to us.
Advanced declines today, they have been going up in lockstep with the averages, which tells you it may not be as headline fascinating as we are by the Mag 7, but the vast majority of stocks are also participating.
Now, the other thing that you do is you talk about the enablers, the adopters, and the adapters. And, in your research, you and your team basically find that, almost every industry, if not every industry, adapts and enables and adopts to some degree. Therefore, how do you choose which parts of the market you should be in at which particular time?
So what we like to do is look at the companies within the range of industries who've been very upfront about talking about AI. So until recently, it's been difficult to put numbers around, how much they're spending and what benefits they're deriving. So we put a lot of stock in, how many times they talk about it on a typical conference call. And we sort of adjust that for some industries. Obviously, technology talks about it more. On average, real estate talks about it less. But we adjust for that. And we also screen that further by thinking about companies who actually have reasonable valuations in a market that's very highly valued, basis their last 5 years of history, and most importantly, in an environment where when we think about 2026, earnings growth is just going to be an extremely important driver, where their earnings revisions trends are positive.
Now, how much does this story intersect with the interest rate story? Because it looks all but certain now that we're going to get at least 25 basis points next week. Beyond that, what do you see, and does that fuel the fire even more?
Well, it does, and you know, we're in the camp that, like the market, you're going to get somewhere between 5 and 6 25 basis point cuts out to 2026. And the interesting thing about it, and the backdrop again of the late 1990s, where the Fed actually tried to pop the bubble that was really only beginning to form in the second half of 1999. We're not in that environment at all. We don't really see any combination of inflation or growth that would cause the Fed to turn around and hike rates. If anything,
All right.
you know, given the way the political winds
Here's
are
what
blowing,
I'm
you
looking
might
at,
get
yeah.
more rate cuts than stickier inflation would expect. But that is part of the calculus.
We'll look to
that
take
drives
some longs
stocks
on
higher
NAS.
and makes higher multiples something that, you know, we
50
can have a little
points.
bit of nervousness, but we want to stay invested.
And a labour market that looks to be, you know, getting incrementally more fragile as we get each incremental.
If we can
data
get a
point.
little
And the
pullback,
fact that
that would
productivity
be
is
quite
increasing
good.
partially, potentially because of AI. None of that concerns you?
No, it's, well, the productivity part, again,
Gold
is
going
one of
up.
the positives. I think the labor market,
Was
from
away.
our perspective, is
Yeah, the DXY is
an
weak, man.
evolutionary type thing.
DXY is coming down, so gold will probably head
Clearly
up.
the
But
data this morning was
at
on
the
the
same
weak side.
time, gold
We
can
don't think
still
it's
head
a
down
red
lower.
alarm flag. So we
Just
do think
because
that when we think about what the
DXY
Fed's
is
going
coming
to
down
do
doesn't
next
always
week,
necessarily mean
there's still
gold
a question
will
about
push up.
whether they're cutting because they can or because they have to.
But let's see what it does.
But there's also this idea
I think gold can definitely be a
change in
buy,
immigration
but just from a
policy,
lower price.
affecting the labor
So I think
balance,
markets
and
might
we'll
just
have to
chill
see how
around
that
until
evolves.
it gets
But on balance,
the excuse
at
to
the
head
end of
lower.
the day,
Maybe today
we're
we don't
still
have enough
near
reasons to push
generationally
lower.
low
Maybe we
levels
don't.
at the unemployment.
You know, you talked
But
about
just
the
leaving it
5-year
at that.
period, which would bring us to, what, 2028? We're 2 years in. But I'm just curious, you know, is there a tipping point at which, sure, it's almost like the monetary policy transmission mechanism, right? The AI transmission mechanism.
I'm gonna
we're
start
using
taking
it
a
more
buy
in
on
the economy,
NASDAQ.
but it's time to move on stocks-wise.
Well, so
Nas,
we're going to be
Nas.
very
Where's Nas?
attentive, again, to that
Got Dow
overall
Jones, but where's the
level
Nas?
of adoption amongst the rest of industry and the trends that we see.
New chart
Because
window.
ultimately, if you get a stalled adoption rate, the hyperscalers will likely be under pressure. We don't see that as an overriding theme right now. But again, to the extent that we get closer to the middle of next year and think about 2027, when right now the projections for CapEx start to moderate, we'll be looking at that closely. But as I said, again, nothing for us to worry about in the here and now.
All right, Julian, see, when I saw that note, I knew it was one to keep on my desk. Julian, thank you so much, and thank you for sharing your remembrances of 9/11 as well. So generous of you. That is Evercore ISI Chief Equity Derivatives and Quant Strategist, Julian Emanuel. Time now for our top calls. Some of the analyst action in focus this morning. First up, Bank of America is cutting its rating on UPS and on FedEx, citing the end of the de minimis tariff exemption for small value packages. Next up, D.A. Davidson cutting its rating on Apple. It's citing the iPhone maker's lack of an AI strategy. The tech giant was also cut at Philips Securities. And finally, Chewy getting raised to a buy at Deutsche Bank following the company's earnings results. The firm says there's more opportunity for revenue growth in 2026 and beyond.
All right.
August consumer prices
Positioned in
were
Nas.
mostly in line with estimates, but still above the
Let's
Fed's
see if
target
this
month
wants to
over
play
month
ball.
at least, and year over year as well at 2.9%. Meanwhile, weekly jobless claims just hit their highest.
Gold does look
since
like it's gonna head
2021.
higher, man.
Bloomberg International economics and policy correspondent Michael McKee joins me now to discuss the data. Michael, you know, many of these, numbers were in line with estimates, but yet when you dive in a little bit deeper, some things were troubling. Airfares, for example, and if you want to fix your car, it's going to get a little bit more expensive.
Services prices are the concern for much of the economics world right now because they're still going up, and they're not really related to tariffs. I mean, but given where we are, even the headline numbers are a bit of a concern. You look at the CPI and the core, and they're going in the wrong direction, and they're way above the 2% target. So at this point, clearly it's not a free pass for the Fed. Certainly doesn't justify anything in the range of a 50 basis point cut, and it puts into question what happens in October and
yeah, gold's
December,
gonna head higher, man.
meetings after September.
I'm gonna come back and look at gold later.
Bad enough to keep them from cutting in September, but beyond that, we're going to have to see. Some of the things that move the most are things that are going to be political problems too for the White House. The president who has declared inflation.
I know you guys can just hear the gavels going off, boy.
Up 0.6%. Used cars were up.
Gavels going off. Boom, boom, boom. Shoom, shoom, shoom. I'm looking at US30. This thing's strong to Ross. S&P's going up as well a little bit.
Audio equipment, not too bad, and those are categories that are tariffed. Video and audio equipment going up, but furnishings is where everybody thought we would see a lot of tariff impact, and it hasn't happened yet. Does that happen? That's going to be the question. And as I mentioned, Bonnie, goods versus services, both of them are going up, but at this point, services prices still rising faster than goods, but you can see goods, the white there on the far right.
All right, hopefully you guys took this little NAS trade with me.
In the wrong direction as well. The trend is not your friend.
If not,
something to
maybe you're just not paying attention.
To try to parse for us when they get to.
But yeah, I can see a lot of you guys have left the stream right now, so we can close the stream now. So Money Day, I will update you inside of the Discord. I don't know who's left over, but thank you for joining today, and I'll see you guys in the Discord. Peace.